Major stablecoins destabilized as market volatility and redemptions surge. Exchange tokens are the backbone for many top exchanges, but how much risk is actually involved? Solana unlock postponed, but is it enough to save Sol from declining? Is dYdX the exchange of choice? And Chainlink CEO is selling 10 apes and 10 CryptoPunks. Does he know something we don't? Hello, everyone, and welcome to the Assets of Value podcast. Today, on November the 11th, and every day, we connect to give an industry insider's perspective on crypto, Web3, and NFT topics. We are the founders of Assets of Value, a Web3 research organization. Our podcast is not to be taken as legal or financial advice. Jumping straight into it, Abe, what are the markets looking like today?
Hi, Shwab. We had a happy bounce from Bitcoin and all the altcoins. Like most of the altcoins have produced 50% plus gains in just one single day. And Bitcoin has hovered around 15.8K for maybe 1 to 2 hours. And now it's way above at 17.2K. And this is a good start for crypto. Like we saw much of the FUD from FTX and Alameda pushing the selling pressure. And we saw miners capitulating. And I think this is a perfectly good environment and perfectly organized buying ground for all your favorite projects.
Yeah, from where we were a few days ago, I am seeing green across the board, but Bitcoin is still struggling to break above that 18K. And I'm just thinking, is this $17,000 range the new 19,000? It could be a slow grind to the bottom, but the Black Swan event of earlier in the week. I mean, how many Black Swan events are we going to get? We keep saying it with the Luna crash, the Celsius crash, and now with FTT. From a market cap perspective, we're on $872 million or thereabouts. So it's certainly quite a bit under 1 trillion. So yeah, it's something that we've got to keep our eye on. What is positive is ETH gas. That is 16 Gwei at the moment. It feels like all the transactions between USDC using the Ethereum blockchain are now done with. And like you're suggesting, that normal service looks to be resuming, which is great to see. It feels like the panic is over.
There'll be always panic in the crypto space, even if it's a bull market or it's a bear market. But these days, we are seeing a lot of harm and a lot of pain in the market. Why? Because we saw FTX collapse, right? Well, that was not just one event. It can influence a lot of other projects to collapse. Let me give you examples. BlockFi was acquired by FTX some 8 or 9 months ago completely, and now BlockFi has stopped accepting client withdrawals. Now, whoever has fund in BlockFi is stuck with BlockFi. They can't withdraw their funds into their own wallets. So this is a big problem, and we see a lot of gaming companies had big stakes in FTX, and they basically treated FTX as their savings account. And now, when FTX fails, and what these gaming companies are going to do, they will be running out of funds and they will be forced to close the project. And when they close the project, a lot of investors will be affected. So, you see, this is a ripple effect and it can affect probably everyone in the space, not just who has direct links with FTX.
Wow, that is huge. I'm just trying to comprehend what could actually happen with major studios treating FTX as a safety deposit space and now not having those funds or not having access to those funds. That's quite worrying to sound the least. How have stablecoins been affected by this FTX saga? I saw something that Alameda was trying to depeg USDT. I saw a piece around Alameda trying to depeg USDT. Is that even possible? Do they have that much clout to even attempt to try that?
Well, Alameda is playing kindergarten games, as we discussed earlier. What happened was, upon receiving instructions and requests from some of the regulatory agencies, USDT Tether successfully froze the accounts belong to Alameda and FTX. They've literally froze around $46 million. And now these players in FTX and Alameda, they're angry and they literally commissioned a trader who has been a shady figure in the crypto space. The trader is trying to short FTX with 100 million account. Basically, it's over leveraged. He has almost $25 million and using forex leverage and literally trying to short down USDT. And what happened was USDT momentarily depegged from $1 and traded around 0.97. It was around a 3% fluctuation, but it really caused some panic in the market, and that caused other stable coins like USDC and BUSD to increase their market share also. This is a big game. I would say it's a drama played by FTX and Alameda.
I'm trying to understand the fact that one trader with a sizable budget can actually influence a whole stablecoin economy, so to speak. A 3% gain or depegging it by 3% is actually quite worrying for one party to be doing that. If that was a concerted and calculated event, that depegging could have been a lot more severe. We saw that with Luna earlier on. Yeah, it just seems that sentiment is moving towards the requirement for regulation and protection. It's a unnecessary evil, but it feels like bad actors can crop up and take advantage and misuse customer and client investment funds, and that shouldn't be able to happen. And if that means more regulation, then it seems like we can't trust ourselves to self-police because greed and ambition will get in the way of that. But yeah, definitely interesting shenanigans going on in that space. Kind of shifting over to a different perspective of the FTX situation. Exchange tokens are the backbones of many top exchanges, but how much risk is actually involved? I was saying not too long ago that FTX looks like a good buy, a good purchase, because where we saw with BNB, that was quite low and escalated all the way up to $300, $500 plus. I was thinking FTX could have been on that same sort of run, that being an exchange token. But how much risk is involved? And almost every exchange has its own token. We've seen Binance, we've seen Bybit, we've seen Qcoin, and even Gate, and many others that have their own coin. Is there much risk?
Of course, there's a certain level of risk. It's a central party risk, which we cannot avoid because we are entrusting these exchanges to be good boys and keep the good manners and keep our assets safe. A funny thing, we both know that Uber doesn't have any cars and apparently FTX doesn't have any crypto. So there's this request from the community to show the proof of all this collateral, all these assets in real. And many exchanges like Binance, OKX, Huobi, they are working towards that. But I believe exchanges can be your entry to crypto. They can facilitate your entry to crypto, but they cannot be your home forever. See, exchanges always have this central party risk. Exchanges hold your token in their hot wallets, and if one of their hot wallets gets hacked, then all your assets are gone. And I think this is a big risk we have already seen with many of these exchanges like Mt. Gox and Bitmart. Even Binance was hacked once or twice. So almost all of these exchanges were hacked at some point, and I don't see why it cannot happen in the future also. When you have big funds, just keep it in your ledger. That's the safest option out there. And you can keep some of the stable coins just to keep you liquid in the exchanges. Even that's not really a good practice in crypto.
Yeah, that's some good advice in terms of exchanges being the entry point and not necessarily the place to house all your cryptos, and wallet storage is the best option. It made me think that Ledger seems like it's pretty much owning this cold wallet market, but that's a topic and a conversation for another day. Sticking with exchanges, is dYdX the exchange of choice? I mean, that one feels like it's offering a lot, and it's actually quite unique, different to the ones that we currently have in terms of centralization.
Well, dYdX is a decentralized exchange. That's a perpetual exchange. So you can trade your crypto there with whatever leverage you prefer. And they are offering, if I remember correctly, they are offering around $100,000 worth of free gasless transactions every month. So you can trade up to 100K a month and you don't have to pay any fees. If you exceed that amount, you'll have to pay a maker fee of 0.02% and take a fee of 0.05%. That's literally nothing when you compare with the exchanges. Most exchanges charge even more than that.
So it's got a good proposition and in terms of the fees and what savings it has. But I think the real differentiator here is the fact that it's decentralized. By that you mean it's on the blockchain. Is that correct?
Everything is on the blockchain, but true aspect of decentralization means who holds the crypto. If it is decentralized, you as an account holder will hold your crypto. You will have the power of ownership and the responsibility at the same time. If you are holding in Binance, Binance has the responsibility and power to manipulate your assets. So it's all about this responsibility and ownership.
Certainly one for us to explore a bit more further. dYdX does look like it's offering something completely unique and needed within the space that we've got at the moment. For me, I'm usually turned towards Binance or KuCoin. Obviously, this isn't sponsored or any financial advice. It's just what's working for me in my situation. Moving on now to Solana, that was pretty heavily affected in terms of its token price. And there was a huge unlock due to take place. But the understanding is that's actually been postponed. How is that even possible to postpone it if it was already supposed to be locked in? I was seeing figures of around 9 to 13% that were potentially going to be unlocked. And this was, I don't know, a circulation amount of just under 1 billion tokens. Firstly, is that unlock postponed? And then do you think that will save that from Solana declining even further?
It's a real possibility, I should say, because when the news of the unlock spread out, Solana quickly dipped from $18 to 12.7, and it was a steep drop. And imagine if that unlock happened, it will constitute real selling pressure, and Solana could be easily dipping down to $8 or $7, or who knows. And these people didn't want that to occur, so they postponed the selling, I should say. But it is coming, guys. They'll sell Solana, and when they sell Solana, you can have a really good entries, because I believe Solana is fundamentally not affected, and this downfall is mainly because of FTX and Alameda. You cannot compare Solana to Luna and suggest that Solana is going to zero, because I believe Solana still has a major role to play in the multi-chain world, especially with the NFTs and games.
So fundamentally, no changes on the Solana ecosystem. But circling back to the point that we said earlier, how many of Solana's backers and investors from the apps that are building on Solana were actually invested in FTX? Granted, that is not only isolated to Solana and Solana ecosystem. Anyone that had any exposure to FTX and was holding anything there would have been affected. But yes, I would agree with you. There's no fundamental change or shift in the way Solana should be operating, except for the fact that an early investor was part of that FTX saga. Yes, the postponement is going to soften it, but there's a call there saying that it could and perhaps will dip further than what we've seen so far. Of course, not financial advice, but something to be prepared for if and when that does happen. Another linked event, which seems to have taken or brought in another prominent figure. So, Chainlink's CEO is selling 10 Bored Ape yacht clubs, 10 apes, and 10 crypto pumps. I'm just thinking, does he know something we don't? But ultimately, it's a nice collection and they will find new homes. I think he had some exposure to FTX, and those NFT collections are now fractionalized in the Ben Dow's sell off, which is a shame. But as long as they are going to new homes, I think that's a positive space. More apes and punks back on the open market, and they're pretty good ones as well.
I think he just needed some liquidity. That's the crux of the matter. Currently, Chainlink has started staking, and they'll be pushing out new narratives. But that also means that the people from Chainlink cannot sell Link token as they please. That's a big thing. And maybe he just wants liquidity. I don't see all the narrative and all the hype behind apes, especially Basie. And CryptoPunks going down. They are OG collections, and OG collection will always retain value.
It has brought down the floor price, the Bored Ape Yacht Club floor price, this liquidity event that is giving a squeeze to the major investors. But let's see how today and the rest of the day plans out. It seems like it's a green day at the moment. Let's hope that positive sentiment carries on into the weekend. As always, it's been super fun. I'm glad you were able to jam with us today. That's it. Until next time, have a great weekend and thank you, everyone. We are signing off.